So I was asking anyone who's trading, anyone who's looking at JPY pairs this week. Ian, you're the one who looks at JPY pairs mostly.
We divorced each other.
Yeah. What happened? What happened? What happened? Oh, okay. Now I can see why that happened. Mixed feelings. A lot of it here.
We had to narrow our focus on narrow and lessen my
Mm-hmm.
pressure.
Okay.
Pressure was high,
Uh-huh.
so I had to choose maybe a few pairs to look at
Mm-hmm.
uh, so that I can have an edge.
Yes, and I think now, considering you have tried all that out, then you realized you'd rather be a master of one than trying to master all the pairs. Master your strategy. Have the few pairs that you observe and look at on a daily basis. Master them well. Then now you can be able to diversify into other pairs rather than trying to master all the pairs at the same time. You'll find yourself overwhelmed a lot because you'll find, let's say,
Yeah,
now, for example, a pair like Euro USD has dropped maybe like dropped a whole 180 pips, while Euro JPY is just consolidating within this area. So if you are looking at Euro USD, Euro JPY, and most of all other pairs, where else you'll have just maybe you'll have just taken one trade on Euro USD and maybe one on GBP USD and left it at that. The other pairs may be just observing or backtesting, but not actively taking positions. Okay.
yeah,
Yeah. So it's very important to be a master of one. So specialize. You know that these are my pairs. I trade dollar pairs. If you have specialized well in understanding and the mastery of dollar pairs, now you can say now I can include API pairs. Maybe I can include CAD pairs as well. AUD CAD, NZD CAD, those kind of pairs. Even though now that will mean you'll have to be active during the Asian session, but you get what I'm saying. Okay.
yeah, yeah.
Yeah.
And during that time, I was getting burnt out a lot.
Yeah.
I felt like I was going for maybe some machinery work. It was hard.
Yeah, that is what happens when you try to master too many pairs at the same time. You get burnt out quickly, because again, mastering these pairs is not easy. It's not easy, considering you are trying to observe market cycles. So depending on how long you have been in the markets, you're trying to observe different patterns. So you're training your eyes to see certain aspects of the market every single day in your trading journey. So once you try to mess that up with different other pairs, so you'll find yourself confused. So I'd rather stick to, maybe, let's say, I usually give a start of three. Three pairs are good enough to start with. Maybe you have GBP USD, Euro USD, and a pair that has the dollar as the base currency. Maybe let's say USD CAD, or you can even have all of them. Maybe GU, EU, and NZD USD. So have maybe three pairs or four pairs at most. Maybe three pairs that have, or two pairs that have the dollar as the quote currency, then have one pair that has the dollar as the base currency, so that you're able to see two aspects, both positive correlation and negative correlation at play. So that you're also not mixing up yourself. You're not selling GBP USD and selling USD CAD at the same time. You know that one of them is wrong or both of them are wrong. Okay.
Yeah, yeah,
Yes. Yes. So it's important to start off from maybe three, four of them. Then you go going higher. So you go progressing. By the time you have done more, you have had more experience in the market, you can now look at five, six, seven pairs. You can now start diversifying into maybe even just using the same strategy. You can start looking at crypto, technical analysis on crypto, because I look at technical analysis on crypto just with the same strategy, supply and demand. If you are maybe looking into trading stocks, you can still use the same strategy, into looking at the stock market as well, because like personally, I look at the stock market. I'm not actively trading it, but when I plot my supply and demand levels, they all align the same way I do that with forex, the same way I do it with crypto, the same way I do it with the US index markets, maybe the European market, that is German 30. You have the German 30, the FTSE, and one is DAX. German 30 is also DAX. So using the same strategy, once you have now solidified on the pairs that you trade, you can now start diversifying all across other financial asset classes. You'll find you're looking at metals, you're looking at commodities, you're looking at options, you're looking at futures, but still using the same strategy. Okay.
Yeah.
Yeah. So anyone?
Also, I saw there's a video I came across.
Uh-huh.
Uh, the guy was saying that when you're trading, so like before I started trading, I used to hear people say,
Yeah.
when you enter a position,
Mm-hmm.
let your position either hit the stop loss or the take profit.
Yes.
But when I came to across this video,
Mm-hmm.
this guy was saying,
Mm-hmm.
yes, you've entered a position,
Mm-hmm.
maybe you're targeting your high position, your high returns.
Yeah.
But in the process, you see when you've entered a trade, it goes according to your analysis, your technical analysis, and maybe
Uh-huh.
you've gotten some profits.
Uh-huh.
The profits you had, he was saying, if you let that money go away, like
Uh-huh.
if it reverses and maybe you get to break even or anything happens,
Uh-huh.
you would have you lose that money and you never had that money. But if you where it gets to, maybe you gotten like maybe 500 USD profit, and you should you should either close the position
Uh-huh.
or just take the profit and maybe let the other run.
Uh-huh.
So
Mm-hmm.
when I was, you know that like I'm targeting to get into the prop farms.
Uh-huh.
Like the challenge I had started for FTMO.
Uh-huh.
Uh, there's a day I had profits, maybe let's say I had gotten to about 600 USD.
Mm-hmm. Ah, nice,
So
nice.
at this point,
Mm-hmm.
when I was viewing this video,
Mm-hmm.
I wasn't looking at the market, so I I brushed it off.
Mm-hmm.
So when I came back in the evening to look at the charts,
Uh-huh.
what he was talking about
Mm-hmm.
is what was happening on my end. So
Mm-hmm.
I found that the market had reversed and I lost the profit.
Mm-hmm.
So when I sat in the evening,
Yeah.
when I was journaling, I said to myself that maybe what he was talking about was about uh, managing your account and maybe your profits.
Yes.
Maybe let's say part of risk managing.
Uh-huh.
And it got me thinking like people tend to ignore the profits
Uh-huh.
since it's not like live money. They say it's not money in hand.
Uh-huh.
It's it's in it's like tech. So you're just viewing the money in the screens. But if you look at it closely,
Uh-huh.
it's it's still real money. Since at the end of it you're going to withdraw it.
Yes.
So he was saying whenever you get the 500,
Uh-huh.
you can either close the whole
The
whole
whole position.
run,
Uh-huh. Uh-huh.
yeah, the whole position.
Yeah.
Uh, maybe try and not have that high return,
Uh-huh.
high reward you're targeting,
Mm-hmm.
because you still have something. You don't. It's not like you have nothing.
Yeah.
Maybe let's say you are almost halfway done with the position,
Mm-hmm.
and you were saying that we should maybe like traders we should learn to focus with the profits. I don't know if you're getting me. Like If your
Maybe
profit,
I think I understand what you are saying.
mm-hmm,
So, but yeah, I think I understand I understand what you're saying. But then again, there is an aspect on how to look at it. Even if you're taking profits, you can't just take profits from anywhere. Considering, okay, depending on your strategy.
mm-hmm,
So depending on your strategy, so you can't just be taking profits anywhere. So you know that now, for example, if you know that maybe you're either a day trader or a swing trader, you're
yeah,
taking profits at either key supply or demand areas or key highs and lows at different areas. For example, a key low is this one that I'm talking about. Maybe a key low
mm-hmm,
again is these ones that you have here. Nice, I can see GBPUSD is gaining movement. And if you're talking about key highs is an area like here. So those are the key highs and key lows. So if you're not taking your trades, if you're not taking the profit at key supply and demand areas, you're taking them at key highs and lows. Okay.
yeah,
Yes. So knowing that then it will be able to guide you on. Now, if I am taking my profits at key highs and lows or key supply and demand areas, now you know that those are your target areas. But if you are patient enough to maybe hold the trades a bit longer until they get to your major targets, then
mm-hmm,
the better. But then again, you can close, for example, you have a 1% risk. Then your positions are currently maybe they have about, your major target is maybe you're expecting a risk reward of 1 is to 6%. So you've risked 1%, you're expecting 6% return. When price gets to about 3%, when price gets to 3%, you can close about 1.5 or
mm-hmm.
2, then leave one running to the next major target. Okay.
Okay. Then,
Yeah.
when I was doing the free trial, the challenge,
Mm-hmm.
uh, I was not able to get how they look at the, I don't know, was it the risk or the returns, the profits and losses,
Mm-hmm.
but not even the profits and losses, the way they were counting 2 trading days. I can't remember clearly.
Yeah,
Three something.
the minimum trading days.
Yeah, yeah.
Yeah. Uh-huh.
I never understood that point clearly. Maybe you can clarify for us.
Okay. So when you have the minimum trading days, it is the number of days that your account should have taken a trade. It doesn't have to be consecutive, but it is the number of
Mhm.
days that your account should have taken a new trade. Okay.
A new trade.
Yes.
So if they are talking about a minimum of 2 trades per week.
Two minimum. Maybe if we're talking about the minimum is 2 trading days. That means maybe
Uh-huh.
I take a trade today, and I take a trade.
Uh-huh.
If I take a trade today and I take another trade tomorrow, I've already passed the two minimum trading days requirements.
Oh,
Okay.
yeah.
Yeah. So it
Because I
doesn't have to
also
be
never
consecutive.
passed
Maybe
because of that.
even if I take a trade today and the next trade I take
Mhm.
it on Wednesday, I will still have passed that two minimum days requirement.
Okay.
Okay.
Yeah.
Yes. So it doesn't usually have to be like consecutive. It doesn't have to be consecutive, but still that requirement has to be met.
Okay.
Yeah.
Because during that period, that got me confused because the first week,
Yeah.
eh, I still hadn't passed that recommendation. So
Uh-huh.
even at the end of it, I never passed the
The challenge.
requirements.
Yeah. Okay. Uh-huh.
Yeah. So I was looking at it. I was wondering what that was, so I had to check
Okay. Okay.
with you. Yeah.
Yeah, don't.
So then,
Okay, you're welcome. You're welcome. So don't don't worry about having not passed the trial. You still have. You can always take any another trial and another trial and another trial. Then after that,
yeah.
now you can now take up the challenge. Again, also with the challenge, you'll find yourself you won't pass the first challenge you take. You won't pass maybe the second challenge you take. Maybe you won't pass maybe the third challenge you take. But eventually, when you pass a prop farm challenge,
Hmm.
okay, you know that now
Yeah.
you have now mastered your you have mastered. There are times you have mastered your strategy, you have mastered your emotions, you have mastered your risk, but the market conditions are bad. So that time it's not you are not you are not maybe you are not, I mean, you followed everything in order, but the market conditions are bad. There are times it happens, especially mostly during the second quarter, of which now we are
Yeah.
almost ending. So you're getting into the third quarter from next month. So usually most that happens mostly during the second quarter of the year. So you'll find bad market conditions, a lot of consolidating markets. So at times you just did your best, but you are not able to pass that challenge. So that shouldn't like discourage you or anything. So you just work towards getting the next one and trying it out again. Considering the if you look at now, I mean, again, as a trader, you're always looking at the risk to reward. So the risk of trying out the platform challenges to the reward is once you get your first payout will be definitely, I mean, the first payout you get, considering usually most targets are 10%, your first payout will be larger than all the amounts that you've spent trying to trying to purchase the challenges. If you do you understand?
Yeah.
Yes, depending on the size of the account. If it is $10,000, you know that that is the first payout. Maybe the target is 10%, so that's about 10,000. I mean, sorry, $1,000. So if it's $25,000, you know your target is 10%, so that's $2,500. If it is a $50,000 account, you know your 10% is $5,000. If your it is $100,000 account, you know the 10% is $10,000. Okay.
Yeah.
Yeah, so even as you progress, I think we are at an era, or maybe let me call it a digital space, whereby it is now making it more favorable for traders to be able to acquire, capital through prop firms. You still have to pay for the evaluation fees and the tests. I mean, for the evaluation accounts, but then
Hmm.
again, look at the risk. Like I've said, the risk to reward. You're risking about $270, $300 for an account. That the first payout will give you 10% of that account, which is maybe $2,500, $3,000, depending on the type of trader that you are. So the return on investment on that is much better than trying to fund a $300 account into, I mean, like trying to fund $300 and now trying to grow it into much larger capital. Okay.
Yeah.
Yes. So, but then again, it's also important to have that live experience, the experience of trading live. So it helps you build your resilience, your patience, and your character in the markets. Because
Hmm.
without having that live experience, you have only been used to maybe demo trading. So you'll find yourself that you don't have the actual experience of losing money. You don't have the actual experience of having to hold a position during drawdown and watching it either hit stop loss or reverse and go into your intended direction. Okay.
Yeah.
So you don't have that kind of experience. So it's very important. Trade live. It's very important. Maybe start when you're going live. Start small, $100, $200, $300, and that is not an amount whereby you expect it to make a lot of money. It's to build your character in the market. So that's now when you step into the prop firm space. You can handle
Hmm.
drawdowns, you can handle losses, you can handle several losses in a row without being emotionally phased or now getting like emotionally overwhelmed. Because again, trading, the psychological aspect of trading usually comes. comes at play when there is real money involved. So I'll find yourself in an up and down kind of psychological state instead of being at a clean, like a clear or a medium kind of state whereby if you take a loss, you are fine. If you take a win, you are fine. Okay. So to
Yeah.
be able to build that kind of resilience, it needs trading live. You need to maybe have lost some money here and there in the markets to build that tough skin, whereby you can comfortably take several losses in a row, and it won't knock you off your emotion. It won't knock you off your psychology. Well, we know the common human nature. Even a small loss of small money tends to bite. Um, to have a painful effect. But then again, it's how you take that. How you take that. There's different levels of the pain that one can take. Maybe, for example, if I ask you today, if you lost $100, what is the level of pain you will have felt in a scale of 1 to 10? If you lose $100 today, what is the level of
Today,
pain you will feel on a scale of 1 to 10?
today, today it would have been five, five, five. Yeah, solid five.
Okay.
Because earlier I
Uh-huh.
had opened an account. The time we are taking the GBP JPY
Yeah.
trade in
Yeah.
class,
Yeah.
I had a live account then. So that time I told myself if this account I lost half of it, I wouldn't trade.
Okay.
So during that time,
Mm-hmm.
I learned a lot during that week.
Uh-huh.
So I opened the position, we took the trade. My lot size was 0.01. Yeah.
Uh-huh. Uh-huh.
So during that time,
Mm-hmm.
I added like three other positions
Okay.
of 0.01.
Mm-hmm.
So when the trade was about to hit my SL, I
Yeah.
said,
Mm-hmm.
maybe these are the times
Mm-hmm.
when the market reverses. So I enlarged my
You,
margin, my
yeah.
stop loss margin.
Uh-huh.
Hey, what I saw. Yeah, that day the account went. I lost half of the account that
uh,
day. So
uh, uh,
that day I felt pain. Then later I took other trades.
uh,
I That was the time I wrote my rules.
uh,
Followed them. What you had taught us, I followed them.
yeah.
Uh, it was more even than half. So I tried to trade a little bit.
Yeah.
Then I was able to recover almost up to half. So
Mm-hmm.
since I had told myself that when it gets to half,
Yeah.
I won't use it again. I'll just wait, then fund it again.
Yeah.
So during that time, I was able to feel some, yeah, quite some pain.
Yeah.
And yeah, I was able to at least even when I was continuing to trade, I was able to learn how to handle my 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 emotions.
Yeah.
Yeah, but that was a good lesson.
Yes. Usually the markets will teach you those kind of lessons, especially when it comes to uh, the psychological aspect of money. Considering what most people really don't understand is that when you're entering into the forex world, you are getting into the largest financial market in the world. So there is that. There is the psychological aspect of you want to make money, yes, but you still also don't understand the risks that you're getting yourself into. This is the only industry where you immediately you're getting into you are on the same. You're looking at the same market with someone on Wall Street. You're looking at the same market with someone at an investment bank. You're looking at the same market with someone at a hedge fund, someone who is willing to drop 1,000 lots on a trade, and you are there trading with a 0.01. So yes, that is the reality of these charts. So there's someone at an investment bank, someone at a hedge fund who is dropping 1,000 lots on the same chart that you're dropping a 0.01 and you are trying to be against his direction. Okay, so it is more of trying to once you get the experience in the markets, you toughen, you really toughen. So it makes you numb to certain losses. Okay, $100
Yeah.
losses, $200 losses, $500 losses. It makes you numb towards small losses, and then now as you progress, because even as the figures become bigger, as the figures because I'm sure like everyone is also targeting towards trading prop firms. As the figures become bigger, as your account sizes become bigger, the losses will also become big, because a 5% loss on a $5,000 account is about 2500 $2,500. So if you look at it from it's $2,500, you will feel the pinch of that is a loss of $2,500. Then you start thinking of there are things you will have done with that kind of money. So that is
Money.
when now
Yeah.
it starts like eating you up from the inside. But once you get used to, you get numb to this kind of, you wouldn't get fully numb, because I mean it is money, but you won't get fully numb, but you will become the losses and the wins, you will develop a very thicker skin towards both the losses and the wins. Okay,
Yeah.
so it won't torment you psychologically. It won't torment you psychologically if you have maybe 2 3 losses in a row, when you are more experienced, as compared to when you're starting out. Okay.
True. True. Yeah.
Yes, so it's part of the process. It's part of the journey. As you start off, you will find yourself crying over $5 losses, $10 losses. But then as you progress, you realize that is just part of the process. Now you have bigger problems. You have $500 losses, $1,000 losses. Then as you progress, as your experience becomes more, you now have bigger problems. You're getting $5,000 losses, $8,000 losses. But then again, you are at a comfortable space whereby you know I can easily recover this and make more. That is now the beauty of also this side of experience in the markets. Okay.
Yeah.
Yes. And actually, that's very good. At least now you're getting to understand the hang of it. Maybe let me ask now those who are live. Joe,
Yes.
have you experienced some losses on your live account?
Yeah, I have.
How big?
Not that big because I follow some strict risk management rules.
Yeah. Uh-huh.
Just a few losses.
Mm-hmm.
I usually have like a maximum loss I can take, maximum loss per week,
Mm-hmm.
maximum loss per month.
Yeah.
So me, I just
Uh-huh.
take small trades,
Yeah.
and I set a profit like for maybe like I set my target for the month. If
Yeah.
I reach the target for the month, I'm good.
Okay. Okay. That's nice. That's nice. That's good. And that's one of the best ways to survive in this trading field. Janet,
Yes,
Janet,
yes,
have you experienced some losses when you're trading live?
yes. Like last week, there's a day I lost $100 in one day.
Okay.
I was
Tell
so
me, how was it?
demotivated.
Now.
It was so painful. I didn't even want to see a chart.
Yeah,
I actually wanted to ask you how you deal with such.
yeah, the losses.
Yeah,
In the early stages, the losses can be very traumatizing. You'll find yourself psychological torment and all that. But when you look at what is there to gain, what is there to lose is smaller than what is there to gain in the long
yeah,
term perspective.
true.
But at the present moment, that loss really hurts. Like now, when you took a loss of a
Yeah,
hundred dollars a day, that was painful. But
yeah.
now, what happens after that? Did you journal that trade? Did you document what happened? Were you able to tell what kind of setup that was, why you took the loss? Did you go deeper into what really happened during that time?
Yes, yes. I afterwards I realized where I went wrong and I journaled. But your time for a day or two, I did not want to even look at the chart.
No. Don't worry, that usually happens in the early stages of trading and the early stages of experience. That usually happens. It's something I also went through in my early stages of my trading career. So you'll find yourself, and as you progress, remember, like I've just said, as you progress, your problems become bigger, don't become smaller. It's how you deal with them. But now, it's how you deal with them that now difference it becomes a difference from when you're a beginner to when you're more advanced. When you're more advanced, you can comfortably take a $3,000 loss, $4,000 loss, and it will bite you just very just some slight pinch, but you'll be like, I know I still have the skill to make more. Okay.
Yeah.
But as a beginner, even $50, you won't sleep.
True.
I've had those kind of sequences as well in the start of my trading journey. So it's something I really whatever you're talking about, it's something I really relate to, because it's something that I was going through as well. So you find yourself you funded an account $100, $150. Me, actually, the first biggest loss I took was I think I'd funded $100 or $150. Before the end of that trading day, 75 was already gone. So I have 75 remaining. You funded an account in less than a week, it's already gone.
Wow.
Yes, it was that bad.
Scared to give up.
Yeah. That time depression kicking in. And I'm like, what is this? But you have to keep, you look at, okay, I've lost $150. I want to make a living out of this trading, and I want to make it a career. When you're making a career, you can't say maybe you'll make $10,000 and quit. I mean, $10,000 in the market is still small. So you want to take this as a long-term career. So I know I am looking at making maybe a whole lot more, changing my life and all that. So whatever I have lost is just a price to pay for whatever I'm going to gain in the future. So that is how I looked at it. And that is how I was able to overcome the psychological torment of the losses. Okay.
Yeah. Also,
Uh-huh.
talking about how we are being challenged with our emotions and everything.
Mm-hmm.
I don't know why.
Mm-hmm.
When I was doing the free trial,
Mm-hmm.
I don't know why I was getting a lot of pressure from like when placing positions, taking positions, and everything.
Mm-hmm.
I was expecting to get the losses, but
Mm-hmm.
I don't know. The first day,
Mm-hmm.
I had a negative, I think 900.
Uh-huh.
I was stressed. I think that messed me up, like during that whole time,
Yeah.
because I was like, hey, it's only the first round and I'm already out. So
Uh-huh.
I don't know. I tried to fix myself up, but it was still hard.
Uh-huh.
Like, I don't know. Can somebody like get up like after the first loss? I don't know how fast somebody can recover and get back to the game, because
Mm-hmm.
that is always a challenge. Like for me, I've faced that for some time.
Mm-hmm.
Like when I get a loss,
Mm-hmm.
uh, these days I keep off the charts. Like I won't trade. I'll
No.
just be analyzing everything. I won't enter any position
Mm-hmm.
during that time. So I don't know how you do it.
Mm-hmm.
But for me, I set a rule like if I get like consecutive losses, like for maybe 3 times,
Yeah.
I keep off the charts, like going into live positions.
Okay.
I take like time off, like maybe a week or two,
Mm-hmm.
then I get back to it.
Okay. Okay.
I was wondering if there's maybe another way of handling it. Maybe you can share your way of doing it.
Okay.
Uh,
Yeah, I think now from the discussion you're having, we will extend to 4 p.m. because I think now you're having a real discussion on the kind of emotions guys usually have on the market. So in case the meeting ends, to join, we will continue until 4 p.m. because I had scheduled the meeting for 2 to 4 p.m. But from the discussion you're having, I feel like it's important we talk about it because it's something everyone will experience it. Everyone is going to experience it. So in case it ends, rejoin, you know the drill. So now how to handle such kind of pressure.
Mm-hmm.
Now let me start off Kwanzaa with the scenario that you've talked about when you're doing the free trial. When you're doing the free trial, you shouldn't have that kind of pressure because it's demo, it's not a paid account. So that was maybe just the pressure of wanting to be right and actually passing that challenge. Okay.
Mm-hmm.
So you had that psychological pressure of you want to pass that challenge, and you know, like you are right that you have passed that trial phase. Or which you found that when you didn't pass, it maybe had some effect on you. Maybe you found that you didn't want to, maybe for a while you didn't want to trade, or you found yourself like a bit slowed down, and that's because the outcome didn't come. I mean, the result wasn't the outcome that you're expecting. Okay.
Mm-hmm.
But now, when you are now actually doing the challenge, not the trials now, you've paid for it, now you're doing the challenge. If you find that you're having pressure during the free trial, then the challenge will be worse. When you're doing the free trial, you shouldn't even worry at all. You can blow the account so many times because it's a trial account. The essence of doing a trial is to be able to see one of the things you are targeting. Don't even target the profit target because it's for the FTMO one is usually 14 days. Sindio?
Yeah.
Yeah, for FTMO it's usually 14 days free trial. Don't target to hit the profit. Don't your goal should not be to hit the profit target within those 14 days. Your goal should be to manage your risk. So that you don't violate the risk parameters, the 5% and 10% maximum loss.
Yeah.
You also look at your consistency. How consistent are you? How consistent are you with the type of trades that you're taking? Okay.
Yeah.
So are you mixing swing trades with day trades, or are you mixing scalp trades with swing trades and day trades? So you're able to see the quality of setups that you have. Okay.
Yeah.
Then you're also able to look at the mistakes that you're making during those trials. If you take maybe like, how many trials have you done?
So far, one.
Now, when you do, you've done one trial. When you do five trials,